Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
It is a giant that is working through the night to accelerate in all of these areas. And if this pace continues, there will be an absolute dominance in terms of these critical segments as we go. And I think we know that China held a certain number of cards at this Beijing summit. I suppose the question for me is whether we had a little bit of a flashback of a tariff announcement with the tariff on European autos recently. But tariffs have very much been in the background as we've spoken about Iran. It seems like there hasn't been much movement in Strait of Hormuz this week. So we're back to talking about tariffs again. Do you see that the tariff, I suppose, element of surprise has still the ability to shock markets, or do you think we're done with that?
I think we're a bit done with it. I mean, I think that we're waiting to hear on how some of these tariff issues are going to be resolved within the U.S. and within the courts. So any new publication, I think, or discussion of them, I think it's sort of a wait and see. But what I will say is a lot of these market share charts are a result of some of the tariffs. And while the U.S. has been assessing tariffs on other nations, it's given China an opportunity to go and form relationships that they may not have otherwise had previous to the tariffs. And we're starting to see green shoots in some of these areas as a result.
And I think it's an interesting point because just to go back here to the Chinese chart, not so long ago, we were talking about China being uninvestable. And there was a sense that maybe emerging markets ex-China was the best way to gain exposure. There was a sense that perhaps regulatory overreach was going to be ultimately destroying shareholder value, and that the rule of law was not being implemented. We're concerned about democracy. And it seems that investors just turn their back on China. But my sense is that narrative has completely dried up at the moment. We're back to thinking of China as a pro-growth, a pro-commerce, and clearly very much on the cutting edge of advancement. And that seems to be somewhere that investors would want to get exposure. And I'm not sure, it's a very interesting change of narrative, which suggests that some of these things are very emotional driven and not necessarily driven in fundamentals.
I think that's exactly right. And that very well may be the case with what we're seeing in the U.S. markets too, and the exuberance you mentioned in the melt up.
Yeah.
Some of that may be emotion driven.
Well, equally, I don't think I have the chart regarding Korea here, but we have at least the headline regarding Samsung Electronics. And Korea maybe is a proxy for the growth in China, it certainly has seen staggering. We saw it went limit up, I think, on Monday. So clearly there's been a desire to rotate in there. And I think we shouldn't forget who could be driving these flows as well. I mean, we've talked about whether there's been a flight out of US assets in the aftermath of both Liberation Day a long time ago, ongoing trade tension, and now also the Iran war. But there's clearly cash on the sidelines that is looking to deploy elsewhere rather than in the US. So I think an interesting phenomenon there. The last slide I have today is on Europe. And there are two real points here. One is that it continues to be the case that America's war is Europe's problem. We still have the Europe showing more volatility, far above US volatility since the war started. It's interesting because Europe has actually been dragged into being involved in this war very reluctantly. They're certainly not actively involved, but they are involved by virtue of their dependence on the oil flowing from there. So there's maybe this passive stance has been punished because it's nothing but pain. There's no upside to them for the situation. They have no control either, nor can they control the outcome. And equally, this is a little bit older, but this chart that the views on the Straits had driven a negative performance by European stocks, positive performance by US stocks. So Europe wasn't in a great place to start with in terms of coming into this summer, but it certainly doesn't seem to be the beneficiary of much good news. But I thought there was some interesting kind of hidden gems here in that we are within Europe. As I said, it cannot be the case that there is no AI play in Europe. It's a huge population. There are some incredible educational institutions. And we've heard a little bit about my base in London. Anthropic having their global headquarters there. And there's certainly room for improvement in terms of the venture capital ecosystem there. We are not starting from a frothy, saturated base. So whether these are just some particular stocks in terms of share prices within AI, hidden Soltech, Calray and Riber as some mid and micro cap names in Europe, according to the London Stock Exchange, and then seeing the AI plays have been leading among European stocks in 2026, well-known names such as STM Microelectronics, Nokia, BE Semiconductors. So a similar pattern appearing when we see the year-to-date performance, I'll say Extron at over 100, looks like 170% here. So it's not being left behind. It's probably just not getting much attention.
Agree.
Yes.
Yeah.
Yeah.
I agree.